Good afternoon, ladies and gentlemen. Thank you for joining us today for this earnings call to discuss our results for the third quarter ended 31st December 2017, which we announced yesterday. Present with me on the call today are Gopal, Raghu, Jaideep, Badal, and Parag. Let's start with the overarching trends in the India telecom industry. During the last year, we have witnessed dramatic value erosion in the telecom industry, which led to a heightened pace of consolidation. Smaller operators have either scaled down their operations or merged with larger players. The proliferation of unlimited voice bundles has further reduced multi-SIMming behavior. As a result, wireless subscribers in the industry declined by over 24 million between July and November 2017, largely coming from the smaller operators who have cumulatively lost over 58 million subscribers during the same period. Data demand continues to explode, led by smartphone penetration and aggressive offers in the marketplace. Increased data demand is calling for higher investments, which cash-strapped operators can ill afford. While market pricing may not follow a linear path upwards, we continue to believe that ARPUs need to move up in the long run. Operators are currently reporting negative return on capital, which is unsustainable given the significant investments in network already undertaken and required to cater to the huge surge in traffic. Macroeconomic factors are turning favorable in Africa with stabilization in prices of crude and commodities. Further in-country consolidation is resulting in a better industry structure, which is a welcome step given the relatively smaller scale of individual countries. Against this backdrop, let me reiterate our five-pronged strategy. Firstly, grab and retain high ARPU customers. Second, provide more services per customer. Third, create a brilliant customer experience. Fourth, accelerate non-mobile businesses. And fifth, a war on waste to hold costs. At Airtel, customers at the heart of everything we do. We continue to take several industry-leading initiatives to transform our network to create a world-class experience for our customers. While Airtel has the highest spectrum market share at over 30% and the largest number of towers and base stations, we have further augmented our network capacity to meet the exponential growth in traffic expected. We are the first Indian operator to deploy Massive MIMO, a 5G plug-in technology, to evolve our existing 4G networks to 5G. Massive MIMO provides better user experience in high-rise buildings, where providing coverage has been a big challenge. These enhancements also help in improving spectrum efficiency, thereby enabling us to serve over 4x to 5x more capacity from the available spectrum resources. These technology interventions are critical, especially in a market which is experiencing exponential and unprecedented data growth. We have launched VoLTE services in 7 circles to date and plan to have pan-India VoLTE services within this financial year. VoLTE provides better user experience through faster call setup and HD voice quality to our customers. Currently, more than 80 popular smartphones support our VoLTE services. Our VoLTE network is unique in India as it can seamlessly hand over VoLTE calls on 4G layer to both 3G and 2G networks when users move out of 4G coverage. With this, we are able to serve voice traffic on 4G network, thereby offloading voice traffic from traditional circuit switch 3G and 2G networks. We have additionally deployed LTE advanced services with carrier aggregation using 2 and 3 carrier components in our network using TD and SD spectrum for enhanced capacities and improved user experience. With these capacities, we have been able to offer peak user throughput of 280 Mbps in our network on commercial handsets supporting these carrier aggregation capabilities. Due to spectrum scarcity in the past, we were forced to build a dense coverage layer of our network towers. To illustrate this, consider that in India, which is about 1.5 times the size of DRC, Airtel has deployed more than 160,000 towers, which is over 110 times the number of towers as compared to DRC. We have deployed over 88,000 mobile broadband base stations over the last 12 months, the highest number of new LTE sites in the Indian market by an operator in a single year. This was done with the aim to have a ubiquitous 4G layer pan-India and deploy TD based on demand in sites with high data consumption. We will continue to expand our footprint to ensure 4G coverage across all census towns and villages with good 4G handset penetration. While our network leadership will help us organically achieve our mission of growing market share, we led the consolidation in the industry inorganically as well. We are pleased to announce that Bharti Airtel has received approval from the Competition Commission of India for its merger of the wireless business of Tata Teleservices, thereby receiving the first set of clearances that the merger needs. Approvals for the Telenor merger are progressing, and we expect the transaction to be completed by this quarter. We are currently awaiting NCLT and DOT approvals. We are happy to inform that Warburg Pincus will acquire up to a 20% equity stake in Bharti Telemedia, the DTH arm of Airtel. Airtel DTH, which was launched in 2008, has grown to become a top 3 in-home entertainment player with industry-leading profitability. The company has a strong distribution infrastructure with over 1,500 partners and over 150,000 recharge outlets. The Indian digital TV market is expanding rapidly, and we believe that Airtel DTH is well positioned to capitalize on incremental growth in digitization and new TV penetration in Tier 3 and Tier 4 towns. We look forward to working with Warburg Pincus towards achieving our vision of making Airtel TV India's leading DTH platform. Moving on to Africa. Airtel Africa continues to witness steady improvement across top and bottom lines on the back of twin engines of data and mobile money. While data growth and the adoption of mobile money are central to the growth in our African operations, our strategy in the continent has centered around strengthening our distribution model and enhancing consumer experience via network modernization, simplification, and optimal bundling of products, leading to 5.4 million net additions on our network. Expansion of Airtel's Money's reach in rural areas has led to 37.9% growth in transaction values on our network year-on-year. With U900 and LT launches in few countries, along with radio frequency planning and optimization, data volumes grew shy of 100%. Airtel Africa's revenue grew 5.3% year-on-year. Coupled with our efforts to create a profitable business model for Africa, margins expanded by 10.8% year-on-year, resulting in a highest ever EBITDA margin of 35.5%. Supplementing our efforts on the ground and in line with our strategy to be number 1 or number 2 in all the countries we operate in Africa, we are pleased to inform that during the quarter, we announced acquisition of 100% equity interest in Tigo Rwanda Limited. The acquisition will consolidate the Rwandan telecom market and position Airtel as a strong number 2 operator. During October 17, Ghana's communication regulator approved the merger of Bharti Ghana with Millicom Ghana. Ghana is now deconsolidated from Africa reporting, and underlying metrics are reported across the remaining 14 operating companies. On the regulatory front, TRAI slashed international termination charges to 30 paisa from 53 paisa effective from 1st February 2018. The cut in the international termination will impact the telecom industry further and will also lead to a loss in revenue to the exchequer. The reduction in IUC will further create imbalance between incoming and outgoing international calls at the benefit of foreign telecom companies and create an additional loss of foreign exchange for the country. Moving on to our financials. TRAI mandated reduction in interconnect usage charges by 57% to 6 paisa from 14 paisa effective 1st October has led to a significant loss in revenue during the quarter. Reduction in IUC coupled with continuing downtrading of high ARPU customers due to industry benchmark price offerings has led to a 22% decline in our Indian wireless business year-on-year. Consolidated revenues for the quarter dropped 13% year-on-year due to the decline in mobile revenues in India as explained above. Consequently, consolidated EBITDA of rupees 75.9 billion during the quarter decreased 11% year-on-year. EBITDA margins, however, increased by 60 basis points to 37.3% due to effective cost management supplemented with growth in Africa. We continue to show strong performance in our non-mobile portfolio in India. In homes, we continue to refresh our broadband plans, and DTH in the period grew 10% year-on-year. Airtel Business also showed remarkable growth at 7% year-on-year. We continue to focus on our non-mobile segments as we believe our diverse yet complementary product suite gives us a unique proposition to own the home market in India across multiple streams of mobile, TV, and broadband. Depreciation and amortization expenses were flat at rupees 48 billion versus the prior year, primarily due to the divestment of operations in Bangladesh and Ghana. Net finance costs for the quarter were at rupees 20 billion, higher by rupees 1.5 billion as compared to the corresponding quarter last year, mainly due to low investment income and higher interest and finance charges. We remain committed to accelerated capex plans considering the explosion in data traffic in India. We have accidentally spent over rupees 20,500 crores over the last 3 quarters to accelerate our 4G rollout in terms of coverage and also build additional capacity in existing geographies along with fiber connectivity and backhaul. We believe that tactically advancing of these future capex spends to provide the best and widest broadband data coverage will augment our growth and revenue market share ambitions. To enable our spend, strengthening our balance sheet and focus on debt reduction remain key priorities. Due to our efforts, net debt during the quarter was flat despite an increase in CapEx. In November, we raised over rupees 3,325 crores by monetizing 4.5% of our stake in Bharti Airtel. A month later, we also announced the 20% stake sales in our DTH arm to Warburg, which could lead to an additional deleveraging of over 1,700 crores. To sum up, while IUC reduction led to a sharp decline in top line during the quarter, India's telecom industry is fast consolidating and witnessing a huge expansion in data towards more bundled offerings. With our scale and efficiencies backed by a superior spectrum and network footprint, we continue to hold and drive market share leadership. Finally, our focus on strengthening our distribution model and enhancing consumer experience in Africa is leading to profitable top-line growth. On this note, I would now like to hand over back to the moderator for conducting the Q&A part of the call.
Thank you very much, sir. We will now begin the question and answer interactive session for all the participants who are connected to the audio conference service from Airtel. Due to time constraints, we would request if you could limit the number of questions to 2 to enable more participation. Hence, management will take only 2 questions per participant to ensure maximum participation. Participants who wish to ask questions may please press star 1 on their touchtone enabled telephone keypad. On pressing star 1, participants will get a chance to present their questions on a first-in-line basis. To ask a question, participants may please press star 1 now. The first question comes from Mr. Sachin Salgaonkar from Bank of America, Mumbai. Mr. Salgaonkar, you may ask your question now.
Hi, thank you for the opportunity. I have 2 questions. Both the questions are to Gopal. First is on data traffic on your network. Clearly, it has increased massively from roughly 0.7 GB per month, few quarters back to now 5 GB per month. I understand your capex guidance is a bit more elevated now, but want to understand how are you optimizing your network to address the surge of data. And related question is, let's say a few years down the line, we have maybe 300-400 million data users, each consuming 10 GB per day, per month. What changes your network needs to handle that kind of a traffic, and how much more capex would we need? And second question is, looks like in this quarter again we had some big impact from down trading of your high-end consumers. Is the peak of this behind us, or we may continue to see continued pressure from this in future also?
Thank you, Sachin. This is Gopal. I think we're looking at several ways to optimize capex, but first and foremost, let me say that at this point in time, we are trying to conclude our overall broadband footprint with a layer of FD, which is our 1800 band across the country in terms of 4G. Almost all of our investments are going behind 4G. Wherever there's capacity requirements, we are using TD. We have spectrum there almost between 20 and 30 megahertz in most parts of the country, barring the Ticona circles where we are awaiting the spectrum. So that's the second layer, but that is chasing the capacity. If you look at data consumption, typically it goes through a tail. So there's a big head followed by a tail. So 10% of sites account for about 30% of traffic, and the bottom maybe 30% of sites account for 5-10% of traffic. So one part is actually planning it at a very granular level to be smart about capex, and that is something that we do for a living. The second is that the requirements on transmission, the core network, and the transport network are actually rising. This is true for all operators as you experience data growth. So that's something that we're also seeing. And the third area of investment is where you need fiber. We look at the country in 3 parts: the top 200 cities, the next 2,000 cities, and the rest of India, to try and make sure that the transport and the backhaul capabilities at a site level are well engineered. When it comes to your question on the capacity, I think we're doing about 12 to 13 petabytes of data a day. That's the kind of ballpark number. Our capacity utilization on 4G is still low. But like I said, we're concluding the footprint. There are also requirements on the core and transport side, and there are requirements wherever there are capacities that fill up, particularly in congested areas. We think that the pricing being the way it is, data growth will continue, and so the big battle for market share is really around the network experience, and that's the reason our capex has been elevated, because at the end of the day, the network is our product, and we have to make sure that our product works. So that's as far as capex is concerned. On the down trading, our challenge really is that there still are a fairly substantive amount of revenues above the cap pricing plans that we offer today in the market. Effectively in India, you can buy now for about 130 rupees a month. You can pretty much buy a data plan and a voice plan, and you don't need to buy anything else because voice is free, data is at a GB a day, and SMSs are also included, roaming is included. So effectively, it's a capped out plan at 130, even though the customer may be willing to pay 300 or 400 or 500 for such a plan. We still have revenue sitting above this level, and that's resulted in the ARPU erosion, that's resulting in some of the down trading. We think that if you look back over the last 3 to 4 quarters, the kind of ARPU erosion that you've seen, we're unlikely to see this kind of ARPU erosion going forward. So that's all I would say.
Okay. Thanks for this, Gopal. So one follow-up question is on capex. I understand it's let's say 3.5 billion for this year and perhaps on similar level for next year. Is that enough, or do you see upside risk to those kind of numbers also?
Yeah, so I think we had told you about 25,000 crores consolidated across TowerCo, Africa, and India. We may be slightly higher than this, depending how much of actually, because there's so much of equipment coming in, we probably could be 1,000 or 1,500 crores higher than this as a year end, just because of the sheer quantities of equipment coming every month. And for next year, definitely, I think we will be in the same ballpark. I don't see any marked reduction for another year. Then, of course, we'll have to see, as much as Gopal said, how do capacities build up. But at least for next year, it will be at the same ballpark.
And just to give you, Sachin, I'm sort of trying to second guess the question that you're asking. While next year we'll also see an elevated level of capex, as Nilanjan was mentioning. I think, given the Telenor acquisition and the spectrum that we're getting from there, given some of the once Tata acquisition happens, the extra spectrum that is available on the 2100 band and the 1800 band in that asset will mean that we will be able to deploy spectrum without necessarily putting as much capex. So there will be a lot more software that we could use to actually do that. Suffice it to say that these are probably the most elevated levels of capex this year and probably next year.
Okay, guys, this is helpful. And finally, some great cost control by you guys. The war on waste is clearly, showing its efforts on the numbers. Thank you.
Yeah, small mercies.
Thank you very much, Mr. Salgaonkar. The next question comes from Mr. Manish Adukia from Goldman Sachs, Mumbai. Mr. Adukia, you may ask your question now.
Yes, hi, good afternoon, and thank you for taking my question. First, just on the pricing environment, while Nilanjan mentioned that prices over the long term need to go up, do you think from Bharti's point of view, if prices actually stay depressed, you could actually gain customers from some of the weaker balance sheet players because your own balance sheet is in a pretty good shape, and you wouldn't, in that sense, actually mind pricing staying depressed for the next couple of quarters? So just wanted to get your thoughts on that. The second question is on the balance sheet. Now, again, while your balance sheet currently is comfortable at around 3 times net debt to EBITDA, are you thinking about more potential deleveraging initiatives? And particularly, I'm trying to get an update on the whole Infratel transaction you talked about in the last quarter. Thank you.
Yeah, I think there are actually two battles being fought in telecom today, and my own view is that by, let's say, March 2019, you're going to have a completely revised industry structure with 3 operators, and the question is what comes out at that stage is likely to be more or less in the ballpark of how the industry structure will play out in subsequent years. The two battles that are currently being fought are one on the 2G, 3G side, which is, let's say, the largely feature phone 2G customers, where this is a traditional game, but there's an upgradation that's happening from 2G to 4G. And the first question is, are we getting a disproportionate share of those upgrades of customers switching from a 2G to a 4G phone on our own network? And I think that's one very important metric that we need to look at. The other two metrics that really we need to look at, which is really where the battle is being fought, is on 4G, where number one, we need to get our fair share or more than our fair share of 4G devices on our network. And I think there we are doing quite a decent job. We're getting our fair share of 4G devices. I think the second real battle is, are we getting that device with a SIM in the data slot, which is the primary slot, because most devices are configured such that you have a primary slot, which is a 4G or a 3G SIM slot, which is a data slot, and the second slot is a 2G slot. And I think that is where we need to step up our game to make sure that we get our fair share, a disproportionate share of the 4G SIM slot. And that is a function of where you put your capex, which towns are you there, which villages are you there, which districts are you there. Because once you've got your network in, with the brand being strong and being aspirational, with our go-to-market and our sales and marketing efforts being competitive and well-run, we have no reason to believe that we will not get our fair share of 4G and, in fact, disproportionate share of 4G. So that's really the battle. I would say that pricing today is at a deeply compressed level, and that is why you're seeing the kind of consolidation that's happened in the last 12 months. Tata, Telenor, Airtel down on its knees, and effectively now it's a 4-player market and soon to be a 3-player, 3+1, BSNL, and we don't really know how it will play out for Airtel. So you're going to have over a period of time, 3 reasonably large operators. And these levels of pricing clearly are unsustainable. So pricing will have to lift. But at this point in time, there is a fight for market share. And that's, being driven by the new entrant. And therefore, pricing continues to remain compressed.
Right. Thank you, Gopal. Sorry.
Yeah, on the question of the balance sheet leveraging, I think, of course, this always remains a priority for us. And actually, what we're doing every quarter, we're just trying to get, inorganic cash into the company. So whether it's through the stake of our Infratel stake outside the majority amount or even getting Warburg Pincus in, I think these all point to, us trying to keep our debt levels, in a manageable level. We are 3.01. While this is not, over the top in a telecom company, but definitely from a company like our perspective, we would like to see this at lower levels. Regarding the overall the Infratel deal, I think, it's all, what you read in the press. There are multiple conversations, happening with multiple things. So there's nothing to be, said about what the final way this will go. But having said that, the board has approved divestment of the majority stake as well. And I think once we find a suitable home, we can have a discussion. But at the moment, nothing on that account.
Okay, thank you. I just had a quick follow-up on Gopal's response earlier. So just wanted to ask, this whole battle around feature phones, so when Jio rolled out a feature phone, you rolled out your own smartphone bundles with lower price points, etc. How's the traction from the customers on that side of the market? Is there any meaningful traction, anything to talk about, any competition from Jio that you can share your views? So would be helpful.
Yeah, I think the feature phone is still early days because the initial response to the feature phone that was launched was kind of, I would say, tepid. We have done our bundles with our smartphones, with the low-end smartphones. And one of the things that we do see is that where we have tied up with a bundle and we've taken it to market well, we see a very, very disproportionate increase in the share of those devices on our network. So that is something that we are seeing some traction on.
Okay, thank you so much and all the best.
Thank you very much, Mr. Adukia. The next question comes from Mr. Srinivas Rao from Deutsche Bank, Singapore. Mr. Rao, you may ask your question now.
Hi, so thank you very much. I have first question to Gopal. The fixed on your fixed line side, what is your outlook? You have kind of, I would say, done some kind of protected your customers maybe over the last 6-8 quarters, but the subscriber numbers have not grown. Given that Jio obviously has quite aggressive plans there, what are your thoughts around that for that business? That's the first question. Second, on Africa, we have seen significant improvement in margins If I look at over 8 quarters, a large part of that has come via SG&A. We did get a fair amount of insights with that in your analyst day. But if Raghu can throw some light as to what can happen further, it will be helpful. And even on Africa, if I can just ask any update on the fourth operator, bankruptcy proceedings, that will be helpful. Thanks.
Let me take the first question, Srinivas. I think what we have seen in the home broadband side is that people are postponing their purchases of new broadband connections. We have at the same time see a very sharp deterioration in churn. So we're not seeing as much churn in that business, but we're seeing a postponement of purchases because at the bottom end what people are doing is actually using MiFi devices or tethering of smartphones, given the low prices of the current plans that are operating in the market, and making do with a network that's decent enough. So that's really what's going on, which is why we have had to compress some of our pricing and make that come in line with what's going on in mobile. While the data allowances in this side of the business are substantially higher, the cost per GB is actually very low, and therefore the issue that we have had in this business is erosion in ARPU over the last few quarters. My sense is that this correction is continuing. Going forward, I think our objective has to be to actually try and pick up and acquire more customers and try and see what we can do once this dust settles to actually start lifting back the ARPU. The point you're making is right, which is if there's a competitive attack where pricing comes down here, that is something that we need to deal with. We've had experience on the mobile side of how to deal with that situation, but we'll find ways to deal with it. Equally, I do believe there's an opportunity in home broadband to expand the presence of home broadband. I think if you look at this year, we've put up about 700,000 odd home passes. We have plans next year to accelerate that. The fact is that this country has a very low penetration of home broadband, and the opportunity to expand is high, even in the cities that we are currently operating in, let alone the cities that we are not operating in. Hi, Srinivas. Sorry. Go ahead.
So thanks. Raghu, please go ahead.
Yeah. As we discussed before also, if you really look at our GR growth, while it is at about 5.5, there has been a sharp drop in what I call the access charges have come down because a lot more voice NRGR ratios have improved. Data and mobile money contribute to much more positive revenues or profitable revenues. We've also cut down, as I had explained before, some of the non-profitable revenue lines. So while the GR looks a little muted, our net revenues are at about 8.7, 8.8%. Second drop you will see is we have restructured our entire operating model. So there have been drops in both network and SG&A. Network unfortunately got also hit by a little network capacity addition that we have done, and also some contractual costs going up. If you really look back, I think our first 2 years of work has been around getting our P&L right and our business model right in Africa. And I think that we are more or less coming to the end. You would see us on a lower capex for a while, but actually starting Q4, you should start seeing that coming back in. So what we will now see is our focus now in future on much faster revenue growth with the twin focus of mobile money and data. Some of you would have seen this in our investor meet on the potential of mobile money in Africa. And I think these are two big bets that we will continue to drive. There's been a lot of learning on data growth from India, and I'm sure we will use some of that while we grow the data business in Africa. Thank you.
Thanks. This is helpful. Thank you so much.
Thank you very much, Mr. Rao. The next question comes from Mr. Bharat Shettigar from Standard Chartered Singapore. Mr. Shettigar, you may ask your question now.
Thanks for the call. Just one housekeeping question. Can you let me know the outstanding balance of operating lease payables as of December? I think the number was about 41,300 crores as of March. If you can give me...
You're talking about the deferred payment, you mean the spectrum?
No, this is more the operating lease liabilities, the minimum operating lease.
Oh, this is what we report in the balance sheet for the normal tower cos, you mean?
Yeah, the reason I'm asking this is rating agencies take the NPV of that number for their debt calculation purposes.
Yeah. I don't have that offhand. We can get back to you for that. Yeah, I know we report it on an annual basis in our balance sheet. I don't have the quarter figure. We'll get back to you.
Okay, thanks.
Thank you very much, Mr. Shettigar. The next question comes from Mr. Naveen Kulkarni from Phillip Capital, Mumbai. Mr. Kulkarni, you may ask your question now.
Yeah, thanks for taking my questions. I have two questions. So my first question is on the revenue market share. Is there any indication that you can provide on where exactly are we moving on the revenue market share? My second question is with regards to Telenor and Tata Teleservices consolidation. So what could be the timelines for that? And my third question is on network OPEX. Is there any one-off on that in this quarter?
Okay. Hi Naveen, Badal here. In terms of Telenor and Tata, it's slightly difficult to predict a timeline around it, but we expect Telenor to come around in the next quarter or so, and Tata could be a couple of quarters away from now. As far as network OPEX is concerned, there aren't any one-offs. This is sustained war and waste program which we have been running for the last 3 years of building in energy efficiency, upgrading our equipment, and kind of cutting down costs wherever possible. So that has been resulting in improved network OPEX for us. As far as RMS is concerned, again, as reported by one of the operators, it's difficult to kind of put a number around it because we do not understand his revenue completely as reported. And but we can say that excluding the new operator, we have been kind of gaining market share continuously for the last 3 quarters in the market.
Okay. Thanks.
Thank you very much, Mr. Kulkarni. The next question comes from Mr. Viral Shah from Credit Suisse, Mumbai. Mr. Shah, you may ask your question now.
Hi, thank you. This is Sunil Tirumalai. I have a couple of questions. Thank you for the opportunity. You mentioned about in the past you have sold stake in Infratel, and you're also open to sell a much larger stake in future. I just wanted a clarification on how the bond covenants kind of work. If your stake at 53.5 right now goes down to below 50 and you deconsolidate EBITDA from your consol reporting, does the EBITDA, net debt to EBITDA calculations also work on the reported IFRS EBITDA, or I just want to understand that, because that would mean that, there's no point just selling 3.5%. You might want to sell a larger one just to get the...
Yeah. So absolutely right. I think firstly, the rating agencies, they work on the consolidated numbers as we report. So if you deconsolidate, of course, it will be a sizable chunk. And that's but natural. When we want to lose control, we will want to look at a strategic stake sale as well. So I think just to go below 50 and in dribs and drabs probably will be very unlikely. So the 3% which we're talking about is what we anyway hold in our infrastructure, in our investment company called Nettle. So anything after that definitely will have to take into account what is the impact of EBITDA when we deconsolidate the numbers and the impact on the overall leverage. So absolutely yes.
Okay, thank you. Secondly, we understand, the tower companies have received notices of exit, even from, operators like Tata and Telenor. We're wondering, is that something you guys are also engaged with, and, what are the risks of doing those exits before, all approvals are in?
So I think the decisions taken by the towercos on their own, or the operators by their own might. And if you're talking about Tata, I think we also read that they have given the exits. We are giving them ICR both to Telenor and Tata. because we believe that at some stage those customers who are going to come to us should avail of a much better networks on 3G, 4G. And I think in their own understanding, the operator must have decided that it's no point keeping networks on and also paying an ICR and having a better network through the ICR. So those are decisions taken by them on their own.
So basically, right now they have the spectrum which will be unused, and then the sites would have been shut, and they would, all the existing customers would be on ICR on your network.
Yes, I don't know how many they have shut. Actually, I'm not privy to how many towers they have shut or not shut. But we offer them ICR, and I think wherever they are seeing probably a reasonable amount of traffic going out, they will probably shut. But I'm not sure how many they have actually shut down in reality till today.
Okay, got it. Thank you very much, sir.
Thank you very much, Mr. Tirumalai. The next question comes from Mr. Varun Ahuja from JP Morgan, Hong Kong. Mr. Ahuja, you may ask your question now.
Good afternoon, gentlemen. Thank you very much. Most of my questions have been answered on CAPEX and even on Infratel. But one thing I want to understand, what is really the moot point on, or where is the discussion right now after the board approval? Is it more on valuations, or is it that you're revisiting the strategy whether you should be holding the towers? And the kind of a part B of this question is, if you are looking to acquire, if you're looking to sell stake in Infratel, is it going to be below 51%, even though the share price of Infratel has corrected somewhat? So some color on that would be helpful. Thank you.
Yeah, so I think nothing much to add. Like I said, there were three permutation combinations, when this whole issue of tower cost came up, Voda idea, whether they were exiting directly through a process, whether they would merge, whether, Airtel would sell. So I think everything is up in the table as yet. We just can't decide the structure of this market on our own. But like we said, we have approvals for the divestment of majority stake in Infratel. And if we go towards that route, whether it's through a merger or through a direct sale or whichever way it is, or even what we've done through strategic investors of Infratel by itself, the next block definitely, like I mentioned earlier, will have to be a sizable amount.
Understand. If I can just follow up with that, I'm trying to understand, you've said in the past that, you would ideally like to maintain ratings and do what's best for the business. Given that, as far as if I go by your metrics, even in FY19, given how the competition is, and obviously you've now mentioned that your CAPEX is still going to be high next year, it seems like just from operations, the metrics may stay out of at least one of the rating agencies' triggers. So whether that becomes that becomes one of the one of the points that you would consider in order to go ahead with the stake sale, or is it going to be mainly on valuation and what's good for for shareholders and long term for the business?
Yeah, so I don't think it's just a black and white decision to say that we only will go by what rating agencies say, because at the heart of what we're doing today is actually to build a strategic value in our underlying telecom business. So, the elevated CAPEX has been, despite the, leverage going up, we are clear that we need to spend what's required to be spent on the business. So the primary driver remains that we need to continue to focus on what's required to, sustain our revenue market share and grow this our data market. Now, beyond that, I think the steps of whether we need to look at the rating agencies, absolutely we need to see that. That's what we've also been doing, by selling our Infratel partial stake, by getting DTH in. So these are the levers which we have. Africa performance has improved. The non-performing countries we are selling. So I think there are a lot of levers which we continue to exercise. And one of them actually could be, like we said, a sale of Infratel. Now, whether the valuation is right, etc., those are all considerations we will take, how much money we need, whether we need it. So I don't think, I can just answer to say, will you look at the price and not sell, or will you look at the rating agencies and decide to sell? So I don't think it is that simple.
Understood. Thank you very much.
Thank you very much, Mr. Ahuja. The next question comes from Mr. Sanjay Chawla from JM Financial, Mumbai. Mr. Chawla, you may ask your question now.
Hi, good afternoon. Thank you for the opportunity. My first question is on the ARPU side. You mentioned there is down trading happening, when you started matching your tariffs to the prevailing tariffs in the market. Can you also talk about the potential of upgrading? Because we have a sizable feature phone base, which is not yet availing of the unlimited calling plans. So can you just comment on what proportion of the feature phone customer base can be potentially upgraded to unlimited products like at 179 or 199? And also a related question is this, are these packs now less relevant because there are cheaper options available at one for 48, 70 days or 82 days? That's first question. Second question is how do you look at competitiveness of ADSL, the fiber vis-a-vis fiber to the building, fiber to the curb? Would you be open to FTTB kind of deployments from a future-proofing your network and customer base point of view, or do you think it's simply not doable in India because of hurdles from LCOs in some markets, in terms of widening up the last mile of the building?
So Sanjay, I think there is a very large opportunity of upgrading from the bottom. Almost 55-60% of our customers are outside of these bundles and at much lower rates, so much lower ARPUs. So clearly there's a large opportunity. Some of them may have genuine constraints on the wallet and therefore may not do it. Some may be dual SIMers which can consolidate. What I was referring to in the down trading is that what happens when you cap a plan is that the ARPU crashes immediately, but the upgradation takes a little bit longer because it is a change in habit and so on and so forth. Whereas somebody who's actually buying a plan for 500, if the plan is now available at much cheaper, just crashes straight away. So that's the reason for the short-term pressure on down trading. But longer term, in a world of bundles, there clearly are opportunities for upgradation as well.
I was asking, sorry, Gopal. Can I just have a follow-up on this? You have roughly 60-70 million data customers, 60 million mobile broadband, 230 million feature phones. So out of those 230 million feature phones, some of them are already on some of these bundle plans. But what is the total percentage which you think can be potentially upgraded to these kind of higher ARPU plans in future over the next 1, 2, 3 years out of the 230 million that you have right now?
Difficult to put a number to it, but I would just say out of the 230 million, around 50-60% of them would be well below these bundle plans in terms of ARPU. You can do your research to see what proportion of them are likely to come up to a bundle plan. Another way to look at this is that, let's say 40% of the Indian market, 40 to 50% of the Indian market is customers with dual SIMs, and so I would imagine that even for this set of customers, which is about 100 odd million, you will have 40-50% of them with dual SIMs, and so what we see as their ARPU may actually be higher on somebody else's network, or there may be a second SIM on the Airtel network itself. And so again, you can do the math and say there'll be some proportion of that who should be willing to upgrade. That's how I would see it.
Okay.
The second question is on fiber to the curb and fiber to the building. Currently, we have several challenges. One, of course, is the fact that we need to fiber up our towers also. So some of those need to be done. And as we move to a world where most of our fiber is at least one hop away from a microwave site, we are planning this in such a way that we can also connect up buildings and offices so that we have synergy in the way we roll out our fiber. That fiber will obviously be taken to the curb of the building, and from there the last mile can be in any medium. But that is something that we are engaged in. Like I said, I think the opportunity to drive home broadband expansion in India remains. It's a very heavily underpenetrated market, and I think over the next 5 to 7 years, you will see greater expansion of home broadband.
So do you think this kind of a wiring can be done on an underground basis, or you think given the viability issues and ARPU limitations, one will have to go only aerial, at least in the last mile?
No, last mile, most of our wiring is done underground because the quality of the wiring that's done overhead is very poor. You see a lot of cuts, and you still need approvals to actually get wiring done. There are today HDD machines and machines that can trench without digging up streets. We use some of those machines. We believe that wherever we have tried overhead fiber, the SLAs and the quality of the customer experience has been very poor. One of our competitors in one of the southern cities uses a lot of overhead fiber. They have fault rates of almost 3 times to 4 times that of Airtel.
Okay. Okay. Thank you. All the best.
Thank you very much, Mr. Chawla. The next question comes from Mr. Ravi Menon from Elara Securities, Mumbai. Mr. Menon, you may ask your question now.
Thank you for the opportunity. To retain your postpaid subscribers, you have offered this unused data rollover plan. So one of your competitors has incentivized prepaid users who are multi-simming to continue using their services through a discounted recharge voucher. I wanted to understand how you're trying to incentivize your prepaid users to recharge, allocating most of their spend to you. Threat being that if what's now being considered a primary number, it can eventually become a secondary number and phased out.
What we see is that when a customer is on our network, if the churn is, let's say, X, the moment the customer adopts a bundle, and you're able to sell a bundle to that customer, which kind of is a way by which you're implicitly asking him to make a choice to consolidate his spend behind one SIM, you see a halving of the churn straight away. The second thing that we see is that when you get a second service or a product into the customer's hands, for example, if we have a music service or a TV service, you see again another halving of the churn. So our lock-in strategy is to actually get the bundle in and get an additional product sold.
Great. And should we read that reduction in churn this quarter as a positive sign towards that?
Yes, I think that is absolutely correct.
Thank you. That's right.
Thank you very much, Mr. Menon. The next question comes from Mr. Rohit Chodia from Kotak Securities, Mumbai. Mr. Chodia, you may ask your question now.
Yeah, hi. Quick couple of questions. First one is really on the eKYC issue. While you have extension till March 31st, by when do you expect full resolution on this issue? And the second one is a little more strategic one. Can one say that, from your initial response to Jio being one that of a very reluctant market share defense, are you now is your stance a lot more aggressive now? Purely because you now probably have the network capacity to compete, you feel a lot more confident about carrying the sort of data that is required to be carried to compete with someone like a Jio?
I think, Rohit, to the first question on eKYC, we have an extension till March 31st, but there have been several exchanges, and we're working very closely with the authority. There was an audit that was done. We're fully compliant with all the issues around the audit. So we are very confident that this will get resolved with time. So I think that's the first part. On the second part, I think there was a time when basically the services were free in the market, and to compete with anything that is free is almost impossible. So we did not. You were absolutely right. We were as you put it, a reluctant player in actually competing there. But I think we've reached a situation today where the ARPUs for the entire business has eroded to an extent where the pricing that you're currently seeing on the 4G side is in any case pretty similar, or probably marginally better than the ARPUs that we have as an aggregate. So the game really is about making sure that you have network capacities, which is why our elevated level of CapEx. And I think the second thing is that ultimately the long-term value creation in this sector will be done through the market share that emerges out of this battle over the next 9 to 12 months, and the industry structure that ensues as a result of that. We think that the biggest battle to fight is actually the incremental share of 4G primary SIM slots, which is what will determine the manner in which the whole game will play out. And that is the context in which we do believe that being competitive and getting our fair share is an important priority.
Quick follow-up on both the questions. On the eKYC thing, is that hurting your net adds? Right now, one saw a decline in net adds in December versus a very strong November month of November. Of course, month of November would have been driven by some gains from ARCOM shutting down. but your numbers in December were weaker than both Idea and Vodafone. So is the eKYC issue hurting you to some extent, or did it hurt you in December, and is it continuing to hurt you? And on the second one, you said next 9 to 12 months is going to be about aggressive market share fights. Do you hope to come out of this 9 to 12 month phase higher than where you are today?
So I think the first part, in December our telco KYC was shut for 6 days. So it did hurt in those 6 days. I mean, it would obviously hurt in those 6 days. I think therefore December saw some pressure from that front. But no, there is no further hurt because after that it was fully opened up and there's absolutely no issue. So I think that's the first part. The second part is, look, there still is about 14% market share from the value players. That will consolidate. We do believe that when you have a very big merger of two large assets with differing cultures, differing people, for every job there will be two contenders, one of whom will get it. For every 3 sites, one site will get shut down. There is going to be complexity in that merger of two very large companies when it comes to Vodafone and Idea. One of the things that we did see in Australia was that when Vodafone and Hutch went through a merger, in a period of 12 to 15 months, they lost almost 13 to 14 market share points. So we believe that this is tough to pull off for any merger, let alone two large companies like this. That's on one side. The other side is the meltdown of the value players, the 13% market share, which will kind of disappear and get down to maybe 6 or 7 with BSNL and Aircel. So that's another opportunity. And then there is a fight that is actually happening between us and the new entrant. And I think in this structure, the question is, at the end of this 12-month period, what is the relative positions of each of the players? Our hope would be to increase our market share. That's not a target, but that would be a hope as you would if you were in my shoes. So that is really how we want to approach it. But like I said, I think let's take it one step at a time. And I think the most important step is to get a disproportionate share of 4G devices, a disproportionate share of the 4G SIM slots. Because if you're able to do that well, then the outcome will be exactly how we want it. So that's the input that we're really focused on.
Got it. Thank you very much. All the best.
Thank you very much, Mr. Chodia. The next question comes from Mr. Viju George from JP Morgan, Mumbai. Mr. George, you may ask your question now.
Yeah, hi. Thank you for taking my opportunity. Gopal, yes, we talked a lot about how your ARPUs are trending down. What are the indicators that we should look for in the market besides, maybe the pricing intention of RGO for us to see whether the ARPUs are beginning to trend up or at least stabilize?
Yeah, I think, like I said, I think, the worst in terms of the ARPU erosion, I would say is clearly behind us. The question that you're asking is, will you see, and I think the pointed question you're asking is, next quarter, will you see an ARPU upside? I think that we just have to wait and watch. My sense is that the worst is behind us. There is still some pressure on downtrading because of what I mentioned, but equally we're also seeing some upgrading now happening. And if we can keep adding good quality customers on the 4G SIM slot, I think this game will even out. So that's how I would sort of classify it.
Sure, thanks. And one question on the margins on some of your other non-wireless businesses. Africa is 35.5. Yes, you've gotten yourself to a structurally better margin profile, but do you think it's sustainable at 35.5? Likewise, on homes, despite a revenue decline, you've managed almost 50%. We've seen that as well. So some of the margins in your non-wireless business are quite elevated. How sustainable are these, or are there one-offs in some of them?
So I'll take the second one first, Badal here. On the margins for homes and even the enterprise business, there have been certain elimination one-offs. But on a sustainable basis, you can take the last 2 quarters average as an indicative of margins which possibly we should be able to hold.
As regards Africa, I think every quarter we continue to deliver. So that's my continuous question to Raghu is, are they sustainable? And he keeps on coming back and he says, I'm as good as my last quarter. So we hope at least at this level we are sustainable, and we'll come back again next quarter to see what he delivers.
Sure, thank you. And the last question was really on income tax expenses. It dived this quarter. That got to do with the losses in India wireless unit.
Yes, so the primary reason for that is because of the losses in India. So that led to income tax expenses going down. The other is that there was a one-off credit of 160 crores in the India business, which we've disclosed.
Sure. Thank you and all the best for the year.
Thank you very much, Mr. George. The last question comes from Mr. Rajiv Sharma from HSBC Mumbai. Mr. Sharma, you may ask your question now.
Yeah, hi. Thanks for the opportunity. I just had two questions. First is, how many, what proportion of your subscribers are on bundled plans today, and where do you see going in the next 12 months or so? And second is, both in terms of the new telecom policy and, like this, we had this termination cut on international calls. Is there any regulatory risk which you anticipate, and which direction is this initial discussions on new telecom policy going? Some color there, please.
So, answering the second one on the regulatory risk, I think with the international SMS, international IUC rate cut, I think this is the last leg of regulatory changes which can impact us negatively. There could be something on SMS, but that will be extremely marginal. Of the number of customers who are already on bundles with us, you can say almost one-fifth of our customers are currently on bundles.
And in terms of your network, capacity, you would be provisioned for what proportion of customers, today, if they were to move on bundle? Just broad.
So we continuously are working on augmenting our capacity, as you could see from our capex numbers. We are fairly comfortable that we will be able to kind of cater to more than half of our customers at even high levels of data consumptions over the next 2-3 quarters.
Some color on the telecom policy which is being formulated?
It's too early to talk about it. We're still in the process of responding to the TRAI, consultation that's on. It's a forward. We expect and hope to have a very forward-looking policy to make sure that the interests of customers, the financial health of the industry, adequate spectrum, making broadband affordable, all of those objectives are met. So we welcome this and we're engaging actively with it.
Okay, thank you. If I can chip one last question, that you've been, on a cost-cutting exercise for the last couple of years. Do you see provision for some cost cutting down, getting more scope there? And secondly, there's a lot of discussion on call drops again coming in. So, how do you read them?
So I think, War on Waste is an ongoing program. We are always surprised at how much opportunity there is to strip out waste when you start re-engineering your processes, digitizing them, simplifying them, and so on. And I think that is the motto, or that's the mantra that we are after. On call drops and generally network quality, I think in some of the cities we have had challenges. With the surge in growth of both voice traffic and data traffic, we've had our fair share of challenges. Managing multiple layers of technology, managing the dramatic growth on the packet core and the transport side. All of that, I think we are obsessed about it. We have divided the country into 1,250 clusters. We track the network quality across each of these clusters. We have toolkits that we have now developed to actually track network quality. We are investing in tools and state-of-the-art tools to improve the quality of the network. We have an alliance with SK Telecom, one of the world's best run broadband telcos, to actually look at some of the digital tools to dramatically improve the experience of the network. So all of this is work underway. I think in the next couple of weeks we should start seeing improvement. We're already beginning to see improvement in a few cities. We should see more improvement. But this has been a challenge because of the surge in growth that we have seen and the multiple layers of technology that we've had to deal with.
That's very helpful. Thanks a lot.
Thank you very much, Mr. Sharma. At this moment, I would like to hand over the call proceedings to Mr. Nilanjan Roy, Global CFO, for the final remarks.
Thank you, everyone, for joining us on the call today, and look forward to interacting with you personally in the investor meetings over the next quarter. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes the conference call. You may now disconnect your lines. Thank you for connecting to audio conference service from Airtel, and have a pleasant evening.
The conference is